Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Wednesday, February 16th, 2022. Market staged kind of a choppy, quiet day in the first portion and then a nice little rally in the late trading day. This came on the back of the Federal Reserve meeting notes from the last meeting. And again, this was basically, remember 2 weeks ago, there was a Fed meeting. This was the transcripts from that meeting. And basically, the market took it as slightly less hawkish. All right, so again, slightly less hawkish was a positive for the market, and the market did rally on it. Now, it wasn't a big rally, but one of the positives for the day was that we did close above yesterday's high. So you can see how, today, early in the day, we traded down. We kind of were in the lower range of yesterday, chopping around. And then on that move on the Fed minutes, we pushed up, finally got through, and actually closed above yesterday's highs. So in the very short term, that is a positive. We'll have to see again if it continues to be a positive if we hold it in the overnight. But again, short term, that would be looked at as slightly bullish going into tomorrow. Now, in the after hours, I believe we did see reports from NVIDIA reporting earnings. As of now, I don't see a whole lot of price action in NVIDIA, as NVIDIA, again, is trading right around where it closed. Looks like it closed at 265.11 and currently is trading at 262.33. So what does that mean? Well, it basically means that NVIDIA's earnings were right along with expectations, right? So the market was pricing in what they were guessing was going to be the earnings results, and honestly, it must have come in very, very close to that, and that's why there's very little price action change on NVIDIA. So again, as of now, I'm not seeing a major move in the after hours. If we flip back to the S&P 500 here, the SPY closed at 446.63. We're trading at 446.52, so we're down 11 cents after hours. And again, that's virtually unchanged as of now. All right. We're going to keep an eye on more economic data over the coming days to see if there's more economic data that's going to cause big upside or downside in the market, and obviously we'll have to keep an eye out for any Fed speak. We also want to keep an eye on Russia and Ukraine. Yes, the market has kind of relaxed a little bit from the fears that were there from last Friday, but certainly there's still a possibility of an invasion, although again, I still said, and I said this from the very beginning, I just don't see the upside for Putin. Again, it just sounds like a big mess to me. And again, it's a mess that's going to bring on some heavy, heavy sanctions and maybe some other things as well. So we'll see. Again, doesn't mean he's going to go by that, but again, to me, it just doesn't make a whole lot of sense. Interestingly enough here, folks, couple things to point out. I am seeing in the after hours FSLY reported earnings. And again, FSLY, you'll remember that is a stock that we have traded in the past, and certainly getting hammered here in the after hours. Closed at $28.93. And here it is in the after hours trading at $22.41. So that is a big time drop, guys. That is a big, big time drop. The beautiful thing about it is, could we care? Not really, because we exited that trade a while back. We exited that on the 7th of February. And again, on the 7th of February, we ended up taking a nice gain of 8.22%. So this is why, again, I love swing trading, is that, potentially you see these types of drops, especially more so in a bear market where these stocks, report earnings and they just get smoked. I mean, we saw Facebook get smoked on earnings. We've seen PayPal get smoked on earnings, and some of these other ones. And it just puts us in a position where when we're not in them, that's really good news. And then we can actually buy them at discounted levels. I'm not saying I'm going to swing trade FSLY. I think that's a whole different can of worms versus a Facebook or a PayPal. In terms of size of company, in terms of quality of company, but at least, again, it gives us that option to buy it in 25% cheaper or 30% cheaper versus where it was just a day ago. All right. China stocks today hung in there relatively well. Some of them were up, some of them were down, but everything was really around the flat line. That was nice to see. We did see Viacom taking a big beating after reporting earnings yesterday after the bell, although that stock really rallied back beautifully by the end of the day. It was on my radar to potentially swing, but didn't get quite low enough. I did day trade this today, but again, didn't get quite low enough for me to initiate a swing trade with you guys. All right, the one swing trade I did play with was AFRM. I did add to this position, folks, and again, good technical level. Well, there's really no technical levels down here, let's be clear. This is a calculatory level, all right, in terms of adding to the position at the right distance, in terms of calculating more support here around $42. So again, doesn't mean it won't go a little bit lower, but I love the fact that we were patient enough from our initial entry above $48 to wait till it got close to 42 to enter, and then there we have a beautiful average around 45. I think at 45.25 is my average now, and that's a nice average, right? I mean, if you think about it, this stock can move $3, which is under 10% in a single day. We just want to keep our average close, and then when the move comes in, we will get paid out handsomely, in my opinion. And again, you're now getting to points where a firm is extremely cheap. Not to say it can't go to the high 30s, but again, you're getting to that point where it does make a lot of sense, where the risk-reward is definitely to the upside, meaning that you'll have more upside potential versus downside as it goes lower. Remember, this stock on the daily chart was at an insane level of $175. So now you're talking 175, and that was, by the way, I mean, when was this? Let me see. That was in November. So in November, 175, and here it sits at $42.50, basically closed around 43. And again, epic decline, definitely getting in the oversold batch here. We'll have to see again how it plays out in the coming weeks, but I do think it is due for a bounce. Okay? All right. By the way, I was disappointed in PayPal today. PayPal was under pressure. Facebook was under pressure again today. I think Facebook and PayPal, again, mostly reacting to Roblox. Roblox absolutely annihilated today. Look at that drop, down 26%. And again, basically Roblox missed earnings. So again, what's interesting about this market, by the way, is that when a stock misses earnings or even misses guidance, they're getting clipped by 25 to 30%, sometimes more. And we saw that with Facebook too, right? I mean, it's not that the biggest stocks aren't immune to these type of drops, because this is a new market environment. Remember that. You got to be careful in this environment when holding into earnings, because if they do miss, they do get clipped in a major way. But the reason why Roblox missed, and in my opinion it affected Bitcoin, is because they're both in that metaverse, right? So Facebook is trying to rebrand itself. In fact, it changed its names to its name to Meta, and Roblox just missed in the metaverse, right? I mean, they just literally missed their earnings. And so that is going to have a trickle-through effect to Facebook, to PayPal, to all these type of names. Although, again, I will say PayPal has a very big level here at 110. I can flip over to that chart real quick, and we'll take a look if I can type in the symbol correctly. So if we go to the chart here, this is your daily chart. By the way, look at the drop on PayPal, $300 to basically $100. That is an incredible drop. But there's a gap fill right down here that's a major, major gap fill, and you're basically kissing it right underneath 110. So look for me to add to this position again underneath 110. And again, we're just adding small amounts, but this is how it works. We accumulate slowly, we do it in the right way, and then ultimately we usually can generate some good alpha when these things get technical bounces off key levels. So again, you can see it right now. It's hard to see because I'm zoomed out so far. But again, there is a gap fill right there. You can see here the RSI on this, by the way, is around 23, and it's been below 30 for quite some time. And again, I want to be clear on this. RSIs don't necessarily mean anything, but there are certain things that with other indicators you start to pay attention to. And so I'll do a quick little educational piece here. What I look for is, so the longer a stock is below 30 on the RSI, which is technically your oversold level, it works. I start to recognize that it works like a rubber band. So the longer it's below, the more pressure is building for the snapback. Okay. Now, again, you don't just buy because a stock's been below, 30 on the RSI. But when you couple it with technical levels and it's been below, you can use that as an extra benefit addition, right, to that potential upside move. And that's what's happening on PayPal. So it wouldn't shock me to see PayPal maybe go to 108 tomorrow, maybe even $100 for all I know. The even number of 100 is a possibility. But ultimately, at some point, you'll have good news. Something will happen that'll cause a snapback, which the charts are telling us will happen. open, and you'll see this thing jump back to 130, 140 or so. There's a big gap even back up to here. I don't know when it will go back there, which is 176, but I do think that does happen. Okay? Let's take a quick look at the charts here. Here's your S&P 500 chart. You can see, again, we eked out a small gain. This is a whole lot of chop, so you'll notice that there haven't been a ton of trades over the last week or so, and the answer to that is just simply that if there's not something to do, if the charts aren't giving us trades, then we're not going to take trades, right? There's no sense in forcing it. If you force it, that's when we get into bad situations, right? So, again, you had the lows here, and you guys saw me buying like crazy. I mean, we bought SC, we bought NET, we had Square a couple times. We still have Zoom and some of these other ones. But once we got up here and we took a lot of the profits, now you're just going do. You're just chopping up and down and up and down. Just let it do its thing. When the chart either pops up here, is going to be a short level. If the chart comes down and goes to your next level, which for me would probably be somewhere in this 400 level or so, I'll have to analyze it closer, but somewhere in that vicinity, then we can buy again. We just have to be patient, and that's how you're going to generate your best returns over the longer term, with patience, not over trading. Okay? All right, so that's your spider chart. We can quickly take a look at the Qs. The Qs continue to be in this channel, like in the lower range. Same thing on the Qs, just a lot of chop recently. We've had an up day, we've had a down day, we get an up day, and so forth, back and forth. If we go up here, I short it, and I short lots of stocks probably up there. If we come down here, I don't think I'd buy this because we've hammered on it too much, but then we start looking for your next level. On the Qs, the $300 level would be a huge support on the QQQ, and I would definitely be a buyer there. And by the way, it doesn't mean that there won't be interim plays, right? I mean, there's always interim plays. For instance, you guys know I've been long a lot of the Chinese stocks. I mean, take a look at Alibaba. Alibaba's just crushing it right now for us, up again today. And again, names like this, my entry 150, and here we are nearing 170, and this chart just looks so good. So does Baba. Alibaba's chart looks so good to me. Let me put it up here. I love this little consolidation. You have this downsloping trend line, which I think will attack sooner than later. Then if that can break, you got a lot of upside back to the gap fill at 160 on Alibaba. I think Alibaba reports earnings next week, by the way. Now, again, this would be an interesting one, right? Because, this stock's already down from 320 down to 125, so would it be at risk for 25% downside? My guess is no, but anything is possible. But again, I do think there's the risk reward here is definitely to the upside, meaning that I think the upside is where the likely scenario plays out, especially with the pattern formation that we are seeing. Okay? Quickly go to the IWM, then we'll flip through Bitcoin, gold, silver, and oil. By the way, great pullback in oil. Just so remarkable how the charts work. And again, the charts make you question it, right? Because we saw oil rallying back yesterday, even though Russia supposedly was withdrawing troops and all this kind of stuff. And then what happens today? Oil's actually up early in the day and then has a big sell-off and collapses back down. And the charts are just the charts. When I added to our SCO, it was just simply that, hey, that was what the chart was telling me to do. And again, I didn't know it was going to whip up and down, and then who knows? But ultimately, the charts know, and that's what we have to follow. All right, bottom line is you still have some resistance around this 210 level. We'll see if the Russell can get through there. The Russell did eke out a small gain today. Taking a look at Bitcoin. Bitcoin pulling back just a shade today. And again, still has resistance at 46,000. That's still the resistance. 41.85 is still support. And again, that's really what I'm following at this point. I'm just watching support resistance. You're basically almost equidistant between the two, a little closer to the high end. But nonetheless, where's the next move? I'm going to let the charts tell me. As of now, I don't have a clear angle to it, and I'm just kind of sitting on the sidelines there. I do have an investment in Bitcoin, although I pared back half of my position, so it's just now kind of playing with the house's money on that, and we can see again if it, how it trades and trade around it accordingly. Okay. Let's go to gold today. Gold, my favorite. My one that I said would be the best performer of 2022 when comparing Bitcoin markets and gold. And so far, so good. How awesome is this chart? Look at the retrace to the scene of the crime yesterday after confirming above, and then look at today's price action right back up. Again, this chart to me is a breakout chart. It is a confirmed breakout. Doesn't mean it can't fail, but the odds, again, probabilities dictate that, again, we should go higher. Next stop is going to be right around 1900 to 1915. After that, you'll have 1964-ish, 1960 we'll call it, and then 2075 double top there. Then that'll be big. If you can break out above that, watch out. Then you get some major upside, probably to 2,600 by year end. And again, it's what I've said even from December of last year. And so far, listen, it's only mid February, but so far it has been outperforming Bitcoin and the stock market. But I do anticipate it will continue to outperform those. All right, lastly, oil, guys. We'll look at WTI here. And again, flip up that chart. And here it is. Here's all those many trend lines that are just all intersecting up there. And sure enough, nice little sell-off on oil. Oil trading still above 90. But again, if everything goes according to plan, we really should see oil come down significantly here. Maybe back as low as $70 or so. Again, if you look at this, right? And that's not the right thing I wanted here. But, if you just look at the moves that we've seen, down, 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 and then down. Look at where this lower trend line is. Now, granted, this is a rising trend line, so it could go up a little bit more. But at some point, I do think price gets down there to wherever that is, and that will be the spot. That'll be then where you definitely want to get out of shorts on oil and actually look for a bounce on oil. All right. Enough said there. As always, folks, it is a pleasure to continue to keep you guys updated and educated and, with lots of insight into the markets. As always, I appreciate each and every one of you for being members. It's you guys that are willing to spend the time watching these videos and learning from them. That's the reason I do them. So thank you and have a great day.